What is up, XRP community? Welcome back to another video. Thank you for joining me. I want to talk about Ripple's SEC meeting that is going on today, a Ripple buyback, and the CEO of BlackRock-backed Circle, the stablecoin issuer of USDC, talking about Ripple. First off, though, I just want to cover this story. This came out today, a few hours ago. A Satoshi-era Bitcoin whale moving $60 million. Now, this guy had Bitcoin in his wallet for 12 years, which is kind of crazy to think about. 12 years of hodling, crazy gains. This guy held Bitcoin from under $1 all the way up to $70,000. And not a lot of people can do that. So whenever I see these Satoshi era wallets that have been dormant, he didn't make one transaction for 12 years, it always makes me speculate a little bit. It always catches my eye. But that's pretty much as far as it goes, just speculation. But it's always interesting when you see a wallet that's not done anything for 12 years move 1,000 Bitcoins. So XRP drops 7% as a Ripple versus SEC settlement allegedly postponed. Now, I don't think this is why Ripple dropped. I think it followed Bitcoin, which rejected 66K or something recently and crashed a little bit today. And typically XRP will follow Bitcoin. But one thing to note is the meeting that the SEC, the private closed meeting that they were scheduled to have today, actually was canceled, as you see right here. According to the SEC website, this very meeting was canceled. So I'll cover that more in the future when it does get rescheduled. And now for this clip from the CEO of Circle. Now keep in mind, Circle is the same company that BlackRock put $400 million into their funding round. BlackRock CEO said on Bloomberg 2 days ago that he was wrong about Bitcoin and cryptocurrency and he sees it as digital gold. But I think what the Circle CEO says here is very important. Take a listen.
You see right now, right, this incredible range of people who are building code, a lot of it open source, contributing to this. The continuous improvement cycles are incredible. And so you don't want to lose that, right? That's so powerful. No government can compete with that. It's impossible for a government to compete with that. And so you want to harness that. And if you want innovation in monetary systems and financial systems and economic systems and you know other uses of this technology as well, like you want to tap that, right? So my view has really been like the you know, open innovation and private sector innovation is like fundamental to how you're going to improve monetary systems. And what's important is that the core infrastructure of fiat in this case, right? The core infrastructure in fiat should be improved, and it should be upgraded to be built on newer technologies. But that the intermediation of how users interact with that and the way in which it's sort of the kind of technical innovation for how that actually gets out in the world should be like more of a free market activity. And so that's sort of my general view. And I think that's upheld by sort of how we've seen sort of internet and software technology adoption happen more broadly in the world. But that doesn't mean like you don't need central banks involved in, say, who's issuing these digital currencies or how's it stored and, you know, their ability to set interest rate policy. And
so private sector innovation is key to fixing the issues in the monetary system. I think we can all agree on that. And later on in the interview, he says, if you want innovation in monetary systems, you need private sector innovation. Specifically, companies like Circle and Ripple. Ripple is indirectly backed by BlackRock, but when you have people like Rosie Rios, the 43rd treasurer of the U.S. government, on their board of directors, Goldman Sachs executives, JP Morgan executives, it's basically the same type of people, these elite traditional finance leaders. Let's talk about this Ripple buyback. Brad Garlinghouse recently did an interview with Fortune magazine, which I'll show you in one moment. In this interview, he reveals Ripple's strategic move to repurchase $1.4 billion worth of shares from investors and employees, which comes at a critical time when it's battling the SEC. The buyback is viewed as a sign of confidence in the firm's long-term prospects. He stressed that the buyback is part of a series of tender offers, displaying the firm's commitment to its stakeholders. So some people have commented on the shares that they bought for around $18. Ripple's buying them back for $61, so a 4x premium. So if you did have Ripple shares, that's very good for you. Now, before this interview, really quick, if you guys want $41 for free, sign up with Webull, deposit a penny, and you're guaranteed $41 in free stocks. Sell your stocks, close your account, do whatever you want. But it's an easy way just to deposit a penny and get $40 of free stocks. You can find a link to Webull in the video description below. Now take a listen to Brad Garlinghouse talking about a variety of things in crypto and specifically the reason behind this Ripple share buyback.
Look, there is clarity about XRP. The federal judge ruled that XRP is not a security. That is the law of the land. Only, sadly, Bitcoin and XRP have that clarity in the United States.
Sure.
And that's a travesty. I'm not saying that as in an excited way. I'm just saying that's a tragedy that it exists that way. Now, in terms of liquidity and those things, I mean, look, I've always viewed an IPO as a step in the journey, not the end of a journey. What we have done instead of, and this is actually new news that we haven't shared publicly, we have done a series of tender offers where we've been buying shares back from investors and employees. And we're in the middle of another tender offer. And after we finish this, we will have repurchased $1.4 billion of stock from our shareholders.
Wow, that's a huge amount. I want to switch topics just a little bit. Yesterday, we had Robinhood CEO, Vlad, and he was talking a great deal about real-world asset tokenization. That seems like a very large growth prospect for both your companies and especially yours. Tell me a little bit about that, because it's a very abstract concept for those of us who are, the normals.
Well, look, I think when we think about trading assets today, and you talk about securities, you talk about real estate, you talk about all these different things, there's friction associated with the movement and even the custody of those assets.
Yeah.
And the idea of if you can tokenize an asset and make it move the way a token moves on a blockchain, you can dramatically make those markets more efficient. Sure. And that's true in real estate. I mean, one of the things that Vlad said yesterday, I was in the audience yesterday, and I thought it was very powerful. He made the comment about how much his infrastructure costs to enable trading decrease between security settlement and crypto settlement.
Yeah.
And he actually said it was an order of magnitude cheaper because they can leverage public blockchains for the settlement.
Yeah.
And I think that people understandably get excited about crypto markets, and there's a lot of speculative dynamics. And I think we don't spend enough time talking about exactly what Vlad talked about.
Yeah.
Adoption of these technologies can dramatically reduce costs, improve efficiency, improve speed in the settlement of lots of different assets. Ripple started by focusing on the settlement of cross-border financial transactions, payments.
Right.
But you can, as you talk about the tokenization of different asset classes, I mean, now you have the CEO of BlackRock, Larry Fink. They have $10 trillion of assets under management. He's one of the biggest advocates out there for crypto at large. He's made some really powerful comments that I think really speak to, and he used to be a naysayer and very dubious. And I think as he learned, he was like, oh wait, these technologies really can be used for real utility.
So no one knows what the state of the crypto market is like better than you. I would love, I would love your just kind of like 30,000 foot view, because it's so volatile, right? Every year, you got your boom, you got your bust. They're getting, the swings have changed since the early days. Where are we at right now?
Yeah. Well, look, I think this has been a profound year with the adoption of an approval. The U.S. SEC fought tooth and nail to not approve a Bitcoin ETF. They were forced by the court to do so in January. That went live. And again, billions of dollars of people who wanted exposure to this asset class moved in. Look, I think the long-term trends for crypto, whether it's because of inflationary dynamics, whether it's because of positive regulatory dynamics, the long-term trends for crypto, I think, are very positive. In some ways, it's taken longer to play out than I would have forecasted 10 years ago when I got in the industry. And in some ways, it's actually it's larger than I might have forecasted, right? You're talking about somewhere around $2.5 trillion is the total market.
It's extraordinary.
And look, I have said publicly before, to much criticism, there's something like 15,000 tokens. I don't know that the world needs 15,000 tokens. But there is a segment, a category of there will be multiple winners here. That different chains are more efficient for different use cases, and that's normal and to be expected.
Yeah.
I think that the U.S. as the largest economy in the world eventually will get this right. Eventually, we will have a different chair of the SEC who is not fighting the very laws that he is championing. I mean, look, one of the things that he and I were talking about backstage, I'll share with you. The United States SEC literally puts people in jail for not providing accurate transparency. Yet we have in this SEC a reluctance to provide transparency. They won't respond to Freedom of Information Act requests. They have been sanctioned by a judge here in Utah about a case where their prosecutors lied to the court. You know, it's really depressing when you peel the onion back to see how this SEC, they're supposed to be working for us, the people, and it's so frustrating. But back to your core question, this will be a speed bump. 5 years from now, we'll look back and Gary Gensler will be in the rearview mirror, and the markets will continue to grow. There'll be more successful use cases and technologies. And look, who could have predicted some of the use cases of the IP networks? As we sit here today, and you and I have been involved in this industry the internet industry a long time, you could not have predicted some of the use cases.
That's right.
The same thing will happen with blockchain. You cannot predict. If you move the marginal cost of a payment to zero, it will surprise you how payments will be unlocked. I'll give you one little tiny example that people talk about. Why do we get paid every 2 weeks in the United States? It's because of the friction of running payroll from 50 years ago. People don't know to run a check run every day. Well, why don't we pay people every day? And what would happen if we paid people every day? Well, then you could pay your credit card every day or your mortgage every day. And that would change the dynamics and cost of mortgages. And how would that actually change how often you pay your mortgage instead of once a month? And my point in saying all this is you can't imagine how some of these dynamics will unlock 10 years from now. And if you and I are on the stage in 10 years, we'll be talking about things that we can't predict. And that's why I'm so bullish about the future of crypto.
Yeah.